Okay.
Thanks for joining us, everybody. We are here for cash flow projections. I'm Linda Fitzgerald, and we're going to switch over. Let me share my screen with you. Keith, can you confirm that you're looking at the right screen for me?
Yep, you're on the title page.
Excellent. This is cash flow projections, and we are also doing a bit of a class on Excel today. Not only will you get the cash flow spreadsheet, you're going to learn how to use it. We're going to work through some issues with you and give you some Excel skills by the end of this webinar. This is the Shasta-Cascade Small Business Development Center. We are a nonprofit organization, and we provide confidential, no-cost advisory and training services to small businesses. We are located in the Shasta Trinity counties. Those are the clients that we serve, but the beauty of this webinar is you don't have to be in those locations to get help from us. But when you are in Shasta or Trinity County, you can sign up to be a member with us and get advisory training from one of our advisors, such as Keith, who's going to talk with you extensively today about cash flow projections. We are sponsored by the Small Business Administration as well as Humboldt State University. I want to start by reading our disclaimer for you. The information provided in this webinar and any supplemental materials provided to registrants are intended for educational and informational purposes only and does not constitute professional, financial, or legal advice. No registrant should act or fail to act on the basis of any material contained in this webinar without obtaining proper financial, legal, and other professional advice specific to their situation. The Northern California Small Business Development Center and its host, the HSU-sponsored Programs Foundation, specifically disclaims any liability, loss, or risk, personal or otherwise, which is incurred as a consequence directly or indirectly of the use and application of any of the information presented in this webinar. At the end, we will talk a little bit about who your contact information is. So I want to show you that slide now. We'll jump back to it again at the end of the webinar. So here, let me stop sharing my screen and let me introduce Keith to you. Keith, thanks so much for presenting today.
Absolutely. So let me go ahead and pull up my screen. Let's see here. Share screen. Okay. So are you seeing my screen?
Yes, it looks great. Thank you.
All right, perfect. So hello, everybody. My name is Keith, Keith Obilana. I am one of the advisors here at the Shasta-Cascade SBDC. I've been here with the SBDC for a little over a year now. A little bit about my background. Before moving back to Reading, I was in Los Angeles for about 10 years. I was an adjunct professor at Pepperdine University, and I co-founded an entrepreneurship program at the university. And I was also the director of a startup incubator in LA. So I do have my undergraduate and my master's degree both in business, and I just have a love for entrepreneurship and specifically small business development. And I love helping people pursue their entrepreneurial dreams. So just really excited to be here, to be part of the SBDC team and helping fuel small businesses here in Shasta County. So with that being said, kind of the way it's going to go today is I'm just going to give kind of a very high level overview of what a cash flow projection is. And then Linda is going to take over and actually walk us through the process of developing one using an Excel spreadsheet or a Google spreadsheet. For those of you who are not familiar with Excel or Google spreadsheets, this is a great learning opportunity to kind of start that journey of learning how to use spreadsheets, because they're extremely helpful when you're running a business and trying to manage a business. So with that being said, we'll also be monitoring. If you guys have questions, please reach out and let us know. If we say something that you're not quite catching or understanding, feel free to just speak up and let us know, and we're happy to answer any questions. So, all right, so with that being said, what is a cash flow projection? So a cash flow projection is really, it's the total amount of cash that flows in and out of a business during a given time frame. So it's usually recorded on a monthly basis and it's forecasted over the course of a fiscal year. So your fiscal year could be the same as a calendar year, which is January through December, or you may have a slightly different fiscal year that starts in a different month. But either way, you're recording it kind of on a monthly basis and you're forecasting it generally over the course of 12 months. So if you've ever heard the term cash flow positive, it means that there's more money going into the business than going out of the business. And that's definitely a good thing. You want to be cash flow positive. If you are not cash flow positive, your business may have some issues. And we'll kind of talk about this in a little bit, but there's oftentimes businesses that are actually successful businesses. They have great sales, they have great margins, but their cash flow is really not in alignment, and that can actually affect the business and shut a business down. So there's a couple items that I just want to address here. The difference between a cash flow projection and a cash flow statement. So a statement is a record of what has already happened, whereas a projection is an educated guess on what will happen. And the reason I point those two out is just because when you're starting a business, you're making a lot of assumptions, right? All the way across the board, you're making some assumptions and you're trying to validate as many of those assumptions as you possibly can prior to starting the business. But there's just some of those items that you're not going to be able to validate until you actually launch or go out and test your idea. So today we're going to be working on projections. We are projecting out what we think our cash flow is going to be based off of the best data that we currently have. But the good thing about using an Excel file to do this is that when you actually launch the business and you start to get a little bit more data, you're going to be able to go back into this Excel spreadsheet and change anything that doesn't line up with your original projections. Okay, so that's one of the advantages to doing all of this in Excel, is that it's easily adjustable so that you can pivot and you can make adjustments on what you're doing as a business owner, as well as your statements. So we're going to get into the Excel spreadsheet and go over this, but I wanted to kind of give you just the basic formula for how to calculate your cash flow projections before we pull up an actual spreadsheet. Because I know, I'm not saying you guys, but sometimes some people see a spreadsheet and their mind just starts to melt because there's all kinds of columns and rows and numbers and lines, and it could be a little bit overwhelming. But the reality of what a cash flow is, it's very simple, very basic. You're going to start with a beginning cash balance. This is the cash that's in your account at the beginning of the month. And you're going to add in any of your cash sales, which cash sales does include credit card sales as well. It's just the term we use as cash sales. It's going to be the collection of your accounts receivables and any other cash injections into the business, like a loan. So with accounts receivable, that some of your businesses will have accounts receivable, especially if you're doing any kind of business to business sales where you're selling to another business or selling to a government entity. Oftentimes when you do that, these other businesses will require like a 30-day payment period, right? So if you're in that category, you don't record the sale until you receive the collection of the accounts receivable, okay? And then from there, you subtract out all of your cash expenses that you paid in that month, and that'll give you your ending cash balance for the month. And that ending cash balance is the same number that you're going to use to start your beginning cash balance for the beginning of the next month. So it's really a pretty simple formula. And I wanted to show that now, because when we get into the spreadsheet, I didn't want anybody to get overwhelmed by all the information that's in the spreadsheet. At the end of the day, this is what we're doing in the spreadsheet: beginning cash balance, adding in your sales, subtracting out your expenses, ending cash balance. And that really is your cash flow projections. So why create a cash flow projection? So I'm sure some of you have heard the term cash is king. And it's estimated that about 80% of businesses fail due to poor cash flow. So you can think about this just like your own personal life. If you have bills that are due by the end of the month, but you don't get your next paycheck till the following month, you're going to have a problem. And that's really why you do cash flow projections, is to identify your inflow and outflow of cash so that you know, hey, I've got bills due by this time. I need to make sure that I have cash on hand. So again, going back to that concept of, you can have a very successful business in terms of you're making a lot of sales and your expenses are low, your profit margins are high. But if you don't have the cash to pay out your current liabilities, whether that's payment on a loan or paying employees or paying some of your vendors, if you don't have that cash on hand, that can cause some significant issues and potentially even close your business. So understanding what your cash flow is going to be on a month-to-month basis helps you plan that out to make sure that you don't end up in that situation. You also create a cash flow projection to help you gauge whether your business is profitable or not, and to decide whether you should even open your business at all. You definitely want to make sure that it makes financial sense to launch this business, not just something that you want to do for fun. If you want to do it for fun, that's a hobby, and that's absolutely fine. But we're trying to move stuff from the hobby state into an actual business. And then you also use it as a budgeting tool when you start your business and when you're running your business. So you know where your money should be going. It's not a haphazard thing every month. You know exactly where your money is going. You're accounting for every dollar that's going into your business and going out of your business. It helps you forecast your potential profits. And then finally, it helps assist in financial institutions or investors in making a loan and funding your business. So if any of you are looking for external funding, whether through a bank or other investor, they're going to want to see your cash flow projections. They're going to want to know that, hey, this business actually is going to cash flow, and that an investment in you is going to be a semi-safe investment. So with that being said, I am going to pass this over to Linda, and we are going to get into a Excel spreadsheet and actually start to walk through the process of creating your cash flow projections.
Sounds great. Thank you. Let me share my screen now. Keith, is my screen displaying correctly?
It is. It is.
All right. So some of you I know joined me for an Introduction to Excel class last month. And I'm going to do a little bit of review because sometimes people showing up are not familiar with Excel, and I want you to be comfortable with what we're talking about. So notice that there are letters across the top and numbers down the side. These are columns, and each column has a name, which is represented by the letter. And then these are rows, and each row has a number represented by the number. And when we click on just one little box, it's called a cell. Each cell has an address. Right now, where I am clicked right now, you'll see that the mouse has selected that box and there's a little border around it. And up here, follow my mouse up here, C6 is the address for that cell. If I click on a different cell, you're going to notice that address is changing. And that's important because we're going to talk about some formulas. Right now, you notice there are a lot of dollar signs sitting on this spreadsheet and not a lot of information yet, but that's okay. This is a template. This is something that when I created my business years ago, see down in the tab name, it says cash flow projection from Joe. Joe is an SBDC advisor, and Joe gave me this spreadsheet years ago when I started my business, and it got me really excited because I was able to start looking at where am I planning to go? What are the different expenses I need to be aware of in my business? So Keith already talked with you about the concept of the cash flow projection. And this is a template. You're going to get this when we send you out the link to the video, as along with the other pieces, such as the PowerPoint presentation that Keith shared earlier. With this information, this is how you start calculating where is the money flowing. And there are a number of formulas happening in this spreadsheet. Notice I have a couple of different tabs across the bottom. I'll go into those in just a moment. But first, I wanted to take what Keith shared with you, and I want to point you to looking at column A. Column A talks about what is the cash on hand. This is the money coming from the previous month. Your cash receipts and how that's broken out. And we can go down here. Now, your particular way of filling this in might not match the way it's set up right now. Maybe you don't have outside bookkeeping, but these are things that are just going to give you more comfort in the concept of cash flow. So we don't have entries in here. We're going to enter some things. For instance, Keith, if you could participate with me on this, let's fill some of these in. And here in column B, it says pre-startup position. When we fill information in here, you're going to start seeing the value of how a spreadsheet can be so much better for you as far as time goes, because this can do a lot of things automatically for you. And there's ways we can manipulate this spreadsheet so that it works better for you and your business. So Keith, what about loan and other cash injection? What do you want to enter there?
Sure, let's go ahead and put in 10,000 right there. So you've got either your own personal money, 10 grand that you're putting in, or you've been able to go out and secure a loan for $10,000. So that's going to be your first cash injection into your business. And so that's what goes into that category right there.
Now notice column B, nothing is happening. It's really a starting point. And we don't have the months labeled as January through December because not every business starts with their fiscal year in January. So that's why the months have 1, 2 through 12. And purchases merchandise. Keith, help me fill in some of these blanks because these are going to populate the spreadsheet for us.
So we'll put 2,000 in there. So this is 2,000. Before you started your business, you injected $10,000 into your business. That was your startup cost, right? And then you're gonna spend that money on various items before you even start the business. So your first purchase is just some merchandise, which would be $2,000 worth of merchandise.
What about supplies?
Okay, supplies. So you might have $500 in supplies. That's any of your operating or office supplies.
And
advertising, we could put 2,500 in there.
Rent, insurance.
So that's going to kind of depend, where you're at. If you have a facility that you are actually renting to start your business, if you rent it before you actually open up the business, then you would put in the amount you put in there, which is going to be pretty typical. You're going to get the facility first. You're going to do a little bit of work on it before you start. So, and that could include like a down payment. So we could put in 1,000 there.
And then we don't need to fill in every item here, but you get the idea of how we're having a starting point. And Keith, I'm going to scroll down here and let me know what other things, now that you can see how the cash is moving here, are there any other entries you want me to make?
I think that's good. I think that's good.
So that gives us our starting point. That's how the money is flowing. And right now, because I'm having to move up and down, I can zoom in a little bit. I realize I could zoom out and you could see the whole sheet, but it would be really hard for you to read what's happening. So I'm going to zoom in. Oh, that's a little too much. There we go. And I'll scroll down as necessary. So here we are in month 1. And notice that little red triangle. That red triangle lets us know that there is a tip there. Here we go. I'm sorry, a note. You can put a note on your cells. This one says keep at 0, do not adjust, but it really depends on the business. So this is cash on hand, how you're starting out that month. I share with you the idea of the tip because you might have a comment that you need to make on a cell. Maybe something happened and it was really unique. Perhaps you're making a payment for a service that if you pay for multiple years at one time, you have a huge savings. Well, you would want to have a tip there. So if you're making that payment in month 1 and you're covering 3 years, you'd want to add a note for yourself so that you don't put that as an annual payment. In fact, it's something you're going to pay every 3 years. So that's what that red triangle means. Keith, let's fill in some information for our first month for creating the projection.
So I think the first thing we need to do is in that month one, cash on hand, right now it's not populating anything. So we need to put a formula in there so that it actually will populate what our starting position was.
Okay, and our starting position is the bottom of the column on the left, right? Is that correct?
That is correct.
Okay.
Column B.
So welcome to formulas. What I'm going to do is on this particular cell, I'm going to click on it. I'm going to hit the equal sign. Now it's waiting for me to do a formula. I'm going to take this little bar on the right side, drag it down so I see the bottom of my screen, put my mouse on top of the value that I want, which is that 4,000, and click it. It has a little moving marquee letting me know that that's the cell. Now I'm hitting the enter key. Now, when we scroll back up, you'll notice that 4,000 has moved up and it now has a address up here. I should say a formula of equals B33. So that value is pulling from whatever entry is in B33.
Does that make sense to everybody? Is that confusing to anybody?
Now, notice that it populated a whole bunch of other cells. It's moving to the right. And the reason for that is these cells, I'm going to zoom out for a second, a little bit more so you can see the whole spreadsheet. These cells are pulling from the bottom. So this particular cell right here is pulling from one column over, C33. This one's populating from D33. So it's taking whatever the value is at the end of the prior month and putting it for the start of your next month. And I also want to talk with you about formatting. This is the way that the sheet was given to me originally. And this is really helpful. And I didn't want to show you the next version because I don't want you to be overwhelmed by it when you first look at it. But here's something really important I want to talk about in column 1. Notice I'm in cell C7, and these are all formulas. Oh, that one's not. That one says 0. This one says B8. This one says B7. So some of them are formulas and some of them are actual cell entry. You can't tell the difference in this particular spreadsheet because they're all the same color. I'm going to go down to a different tab. See these tabs at the bottom as I move my mouse across the bottom? You're going to see the subject, or I'm sorry, the words on that tab get bold when I hover over it. And when I click on it, that spreadsheet comes to the front. Notice this spreadsheet's different. This one I altered in that for the cells that you can type in and enter information, I made them yellow. And the cells that are doing calculations, I made them blue. So the text is coming across blue if it's a calculation. The reason for that is I don't want someone to accidentally type a value over a formula and then it makes the spreadsheet stop working. I'm not going to stay in this mode, but I just wanted you to see the value of how you can customize your sheets like that. Keith, you and I talked about this ahead of time. Do you have any particular coding that you do like that when you're using spreadsheets?
You know, I do something very similar. You know, it's really just to identify so that if there is a formula in one of those cells, you don't want to type over the formula. So you know, okay, this particular spreadsheet is color coded so that everything that's highlighted in yellow, those are things that you can input data into, and everything that's not highlighted yellow, you should leave those alone. Now, if you were to ever make a mistake and accidentally type over a formula, it's not a big deal. You can reach out to one of us and we can help you figure out what the formula needs to go back in there. So it's not a big deal, but in general, that's kind of what you're trying to do, is only input data into the cells that are highlighted.
So let's talk about how to highlight a cell. So we're going to go back to this sheet here. And this particular cell right here, C9, has the number 0, and that means it's expecting us to put a value in there. So let's say we wanted to make this yellow. Up here, if I hover my mouse over any of these buttons, I get what's called a tooltip, and it's an explanation of what that button does. I'm going to go here and I'm going to choose a color. Now, personally, I know that when I choose this color yellow, for my screen, when I've been a financial analyst where I'm spending 9 hours a day staring at my screen, this particular shade of yellow is hard on my eyes. So that is the default yellow we choose, but I personally prefer to go to more colors and choose a paler shade of yellow. And depending on your screen, that may or may not show up. But for me, I don't want that really harsh color in my eyes all day. But it does clue me in as to what that value is, whether I'm typing in that cell or not. Now the cell below, here's a formula. This is telling me that it's going to sum C7 through C9. And here's C7, C8, and C9. Now this one, to follow the color coding I used a minute ago, we would want to make this one as well as the one below it. They're both formulas. We would want to make those blue. So right now I'm clicking on one and I'm holding down my left mouse button and dragging down so I can highlight both at the same time. I'm going to make both of those have text color of blue. So this is my text color button. When I click on the drop down, it gives me all my different options. I like this blue right here. And now you'll notice that those are blue. And if I enter something here, it's populating. Now this is a projection model like Keith talked about. So what it's suggesting to you is calculate month one, fill everything in for month one. We're going to project those numbers out for the rest of the year so you can anticipate what your whole year might look like. So Keith, right now, let's work through, and feel free to override my number in January. I'm sorry, for month one. Let's populate all of month one. Watch how it populates all 12 so that you can look at a projection and talk about that. So let me know what you would like to have in the month one entries.
Okay, so in month one, let's say you got out there, you got hustling, and you made $2,000 in cash sales. And again, remember, cash sales can be actual cash, physical bills and coins, or it could include things like credit cards or checks. Those are all considered cash sales. What's not a cash sale is if you sold something or provided a service that somebody's going to pay you in, say, 30 days or 45 days. That would not be considered a cash sale. That would be considered an accounts receivable, which would not go onto this particular spreadsheet. Okay. And so I don't, let's go ahead and zero out the loan or other cash injection for this month.
Got it?
Yeah. Okay. So our total cash receipts in our first month was $2,000. Now, depending on what type of business you're doing, that may be great. That may not be great. But usually when I fill out these kind of projection financial sheets, you want to take into consideration what's really going to be happening in the business. So most of the times when people start a business and launch, your month one is not going to be your highest month. It could be, but generally you're going to ramp up over the course of the year. So in this month, we made $2,000 in sales, which is great. Congratulations. And then let's see. That's a little bit small for me to see. So I'll pull
I'll enlarge it.
Okay. You're okay. So I can see the categories. There we go. So, and then again in month two, let's say, or in month one, you had to buy some more merchandise. So we could put another $2,000 for merchandise. And let's say you had some employees or an employee that you had to pay in your first month. So this is where you would put it in. Note that this says gross wages excludes owner. And we'll talk about that when we get down just a little bit further. But this is the gross wages for your employees, not you as the owner. So in here, we could say we had to pay out $1,000 in wages. And then there's also going to be other payroll expenses like taxes that you have to do. And so we could put $300 in there. And that's something where you'd want to talk with a payroll specialist to really get an idea of what is the actual cost of an employee. Because if you're paying them, say, $12 an hour, your cost is going to be more than $12 an hour because you're responsible for other things like SSI and several other taxes that go into having an employee. So for now, we'll just leave our outside book services blank. Supplies, let's say we had to restock up on some supplies, so another $300 there. And then we're going to continue our advertising efforts. We can put in another $2,500 there. Oftentimes when you're first starting, you're going to have your advertising expenses can be a lot higher just because you're trying to get brand awareness. You're trying to get people to know about your business and your brand. And so you're really going out there and hustling and buying some ad space on your various platforms to make sure that your business is successful right off the bat and people know about you. So then we could go to car delivery and travel. We could put in another, let's say, just $300 there. So keep in mind that if you are using your personal car for your business, you get to write a percentage of that off. And there's a couple different ways to do that. One is to just keep track of your mileage, and the government gives you a rate. Right now, I think it's at like 56 cents per mile, something around there. So you would take how many miles you drove that month for business and multiply it by 56 cents. And then we have our rent again. Let's go ahead and put another $1,000 in for rent. And then your phone and internet, we'll put in $60 there. And utilities, we could put in another 100. And insurance, it is a very good idea to have a business insurance policy. So depending on the level of risk with your business will determine how much insurance costs. So if you're in a very low risk industry, like say you're a photographer or a graphic designer, your insurance is going to be fairly low. You could do something like $50. But if you're in a higher risk category, let's say you have a gym and you have heavy equipment in there that, weights and stuff that people are lifting, you're going to be in a higher insurance category, because if a customer gets hurt lifting a weight and they sue you, your insurance company needs to be able to cover that. So that's going to cost you a little bit more. And then you can just leave the other ones blank and go down to the owner's draw. So if you guys remember earlier, we talked about wages, but does not include the owner. That's because the owner draw is a little bit different, and this is where you would enter it in. So owner's draw, this is how, as a small business owner, you would generally pay yourself through an owner's draw. It's important to note that you should have a business account that is separate from your personal account. That's very, very important to separate out the two. And so when you take an owner's draw from your business, you would take the money out of your business account and put it into your personal account. And this is where you would record that. So if you look down at the very bottom on row 33, you would notice that we are already in the hole $1,600, $1,610, right? So we did not make enough cash this month to cover our expenses, let alone pay ourselves a wage, right? So at this month, you would not be able to take out an owner's draw from your account because you are already negative. So in a scenario like this, you would either need to have more money in your account to begin with, or you would need to make sure that you hit a higher number of sales. And that's why we go through this whole process, is so that we can analyze things like this, all right? So Linda, we could go ahead and leave that as is and scroll back up to the top.
Sure. Oops.
And so if we look into the month 2, you'll see that it is populated from the ending cash balance from month 1 at negative 1,600. Your business is not doing so good right now. And this is how we get to monitor and track the profitability of our business. So again, we know that we need to have done better based on what we had, the money we had in our account to start the business. We needed to have done better in our month one in terms of sales to be able to cover all of our expenses and get you as an owner paid. So in this scenario, we're going to say, hey, from month one to month two, we really went out there and hustled. We did a lot of marketing. We did a lot of outreach to increase our sales. So in month two, we actually doubled our sales to $4,000.
And I want to point out right here, this file is taking the item in the left and copying it over to the right. So let's look at what's happening up here. Right now, we entered that value of 2,000. You can see it up here. We entered that. And now it was projecting out for us. So it said, if you're going to earn 2,000 in cash sales, let's imagine you earn that every month. So this entry right here says C7, which is this cell next door. So the value here is copying the cell next to it, which is great as we start looking at something to create a projection. But like Keith said, we now need to override these projections with what we think is making it more accurate. And hopefully with your business, you're growing your cash sales over time. And Keith, I think you mentioned 4,000 here, right?
Yeah.
So by typing in this cell right now, I'm going to replace the formula of equals C7. I'm going to type in 4,000. And when I hit enter, you're going to notice calculations change across the page. So now we have this formula down here recalculating, and this cell is grabbing the number from the left. This cell over here now equals D7, which is this new entry. And like Keith talked about, we want to look at this, and now it did so much work for us. I'm going to make this a little bit smaller. I realize it's hard to read, but now you can see how this projection is flowing month to month. And you can start honing in on, oh goodness, this needs to be adjusted higher. This needs to be adjusted lower. Perhaps your advertising won't be 2,500 every month. So Keith, as a business owner, where would you be able to go in here and start moving money around so we can start seeing some better numbers?
Right. So obviously the first thing is to increase your sales, right? And that's when I work with small business owners that love to just kind of be in their office doing their thing, and not really focusing on sales and getting out there and pitching their idea or their product and really hustling. If you want to be a business owner, you've got to do that, or you've got to get somebody who can do that for you and really get out there to push your product. So first place is obviously to start increasing your sales. And then next thing, when you start to look at are just your expenses. And right now as a business, we are not doing so good. Our sales are not covering all of our expenses. So we need to make some business decisions here. So first thing we do is start to look into our expenses, our merchandise. Are we paying too much for merchandise? If so, then we could potentially reduce our merchandise. And there's a thing here that we're not really looking into, and that's a completely different topic, is looking at the financial analysis of your products and services, meaning that what are you selling them for versus what does just the product itself cost you, let alone your other items like rent and utilities. That's called your cost of goods sold, COGS, if you've ever heard that term. And that's a different financial analysis, but that's definitely one place that you can start looking into to determine, is my sale price for my product versus the cost to acquire the product too high? And you can go in and adjust that. So one way to do that is to find a better vendor for your products at a lower price point, and or as you start to ramp up your business, start to get discounted pricing based on buying in bulk, and that can lower your cost. So then the other thing you have to look at are your gross wages. All right, right now we're spending $1,000 on an employee, and I can't tell you how many business owners that I work with that say, yeah, I'm going to launch this business, I'm going to hire all these employees, and then I'm just going to kind of sit back and just kind of manage that. And the reality of it is, when you first start a business, oftentimes you can't afford all the employees that you want, and you end up having to do a lot of that work. So in this case, one of the things that we could do is we can actually lower the amount that we're having to pay for employees. We could say, hey, look, We're hiring an employee full-time, but we just don't really have the business to support that right now. So we need to make a business decision, even as hard as it might be, to lower that amount. So in month 2, we can go in there and say, hey, we've lowered our full-time employee to half-time. And so that's going to be $500.
And Keith, I want to point something out that Dana noticed looking at our spreadsheet. Look at row 14 and see how I made a change. The 500 is going across, but look, it stops. Month 10, it didn't populate. Month 11, it didn't populate. Same thing's happening for some of these numbers down here. It is so important in Excel that you are aware of what is happening in your spreadsheet. So let's research that. Let's see what's happening. Look, it says 0. It says 0. It's waiting for entries. So I have an option here. I have a couple different ways to copy this formula over. I can click in here like I did earlier, and I can hit the equal sign, and then I can click on the cell next to it and then press enter. That works out well. Here's another thing I can do. I can click on the cell and notice the shape of my mouse, how it changes. Right now it's a white X or white cross. Now it's a 4-headed cross. Then when I go to this little bottom corner, it's hard to tell, but there's a box there. I'm going to zoom in for you. Here we go. So there's we see it less here. I'm going to take it, clicking on this same cell. I'm going to take my mouse here to the corner, and I'm going to hold the left mouse button down and drag to the right. That's another way you can copy that formula. So there's a number of different ways to copy formulas. And what it does, it takes into account the relationship to the cell that it's in. So for instance, if we go to that formula in L14, L14 is saying pull K14, which happens to be one cell to the left. So when I move that formula, it's going to pull one cell to the left. There are what's called absolute references, which means you always pull from that same number no matter what. And we use dollar signs to do that. That's kind of an advanced class, but I just wanted you to understand that as well. So let me zoom out here and hand it back to Keith.
Okay. So if you could adjust so that I could see the categories on the left. Row A. There we go. All right. So we adjusted our gross wages based off of our business needs. We've lowered our employee amount down to 500, and our payroll expenses will probably go down as well. So we could put that at 150.
So that was which one at 150, Keith?
So that would be payroll expenses, row 15.
Or are we talking month 2?
Yes.
And you said 150?
150.
Okay.
Yep. And then let's say, hey, you know what? We have been spending a lot on office supplies. We need to kind of adjust that as well. We need to not spend as much on our office supplies. We need to make do with what we have, so we can adjust that down to $100 as well. All right, and advertising, we can adjust that and say, okay, we need to spend just a little bit less on advertising because we're not quite making enough. So we could adjust that to $1,000. But again, you don't want to make the error of saying, hey, we're not making enough money, so we need to stop advertising, because if you don't advertise, you're not going to grow the business. And then, let's see, got a little small. Where else can we adjust? Our rent, generally you have a lease, you can't really adjust your rent once you're already in the lease. It's going to be $1,000 no matter what. But again, this right now we're doing a projection rather than a statement. A projection is what we think it's going to be versus a statement what it actually is. So in a projection scenario, we can play with some of these numbers and we could say, hey, $1,000 in rent per month is actually not going to be great based on our anticipated sales. So we need to see what can we do to lower that amount. And one thing could be to not have the nicest space there available, right? And so that lowers it down. And or it could say, you could say, hey, look, I'm going to find somebody else who has a really nice space and just sublet some of their space in order to get my business up and going. And once I've gone through the ramp up stage and my business is doing well, then I can go and get the corner office with the nice window. Okay. So to change that, let's go ahead and lower our rent, because we just had a wake up call that we can't have the nicest place. So we'll lower that down to 700. And in this case, what we're going to do is we could actually go back to, okay. You could also do that in month one as well, because this is a projection. So we can adjust those numbers retroactively to see how it'll affect our cash flow. All right. And then let's see, liability or utilities and gas is going to generally remain the same. That's your could you blow it up just a little bit, or zoom in just a little bit? I'm having a hard time reading. Okay. Yeah. So we go down to the bottom. Insurance will be the same. We'll go down to the bottom and let's see how we did with our adjustments. All right. So column D, which is what we're in, is our month 2, and we're still at negative 2,200. All right. So we're still, as a business, not doing very well. We need to increase our sales for sure. And if there's any way else that we can reduce our costs, we need to do that. And again, this is the good thing about creating cash flow projections, is it helps you make these decisions and really understand what the financial outlook of your business is going to be based on some assumptions that you've made prior to starting. So let's go ahead and scroll back up to the top. And we're going to go into month 3. And you can see at the very beginning, our cash on hand is negative. We are still in the hole. We still owe money. So we need to really hit it hard with our sales. So let's say we got out there, we did it again, and we're ramping up each month. We're doubling our sales, which is great. So in month 3, we hit $8,000 in sales. Yay, congratulations. As you can see now, going down, our total cash available in row 11. Row 11, our total cash available is 5,730. So we're doing better. We're in the black now. And we could go through and look at our expenses. How are we doing on expenses? If we need to make any adjustments there. Right now, it looks like we're doing pretty good on our expenses. And we could go down to the bottom and we can see for that month, we were finally positive $770. Now, keep in mind, the first few months, the owner has not taken an owner's draw. The owner has not paid themselves for their business. So you get to make another business decision here. You can, for the first month, take an owner's draw. You can take out $770 and that will balance your account at 0. I do not recommend that. Generally, when you're first starting your business, you want to keep your cash in your account so that you have money to continue to invest in your business. You may have to buy some more equipment as you continue to go down the road. If you've taken that money out, then you're going to have to provide the business with another loan to be able to buy your equipment. Or if you left the money in there and reinvest it in your business, you have that money. So in this scenario, I'm going to say, Linda, that we're not going to take an owner's draw right now. We're going to keep that money in the account. Okay, and so you can see at the end of month 3 on row 33, your cash flow position is your positive $770. We're moving in the right direction. So now we can scroll back up to the top, and we're going to look at column F, which is month 4. Our starting position is what we ended last month at 770. And now we can go in there and change our cash sales. Let's go ahead and increase our cash sales because our business is still ramping up. And we could put 1,200 in there.
Keith, I'm going to make an Excel adjustment here.
Sure.
And help make it a little bit easier for us to view. So I'm going to go up to view. and freeze panes. This is really helpful. First, what I'm going to do, and sometimes it takes me a couple adjustments to get this right. I'm going to highlight some rows, and I'm going to say freeze panes. And now, if all goes as planned, oh, it didn't choose exactly the ones I wanted. This is where Excel surprises me a little bit. Let me go in here and unfreeze panes, and let's freeze them again. See if it captures the right ones. Well, it didn't capture the exact ones, but you get the idea. I'm keeping the headings on top so you can see where we are as we move through. So continue, Keith.
Okay. All right. So we are in month 4, which is column F, and we're going down. We just made $12,000 in sales this month. We're doing really good. And when you're forecasting this, one of the things that I like to point out is whether or not your business is seasonal. Okay. So when you're forecasting, you may have a very steady increase in your sales, but let's say this is a seasonal business where the summer months, that's really where the majority of your business happens. So if we did indeed start month 1 was January, we're now in January, February, March, April. We're starting to get into the high season, the peak season for our business. So you may actually see a bigger spike in your sales in these next few months, which we'll put that in there. But that's something to keep in mind when you're doing this, is just the seasonality of your business. And when you're forecasting to go ahead and make some projections based off of that seasonality, but you have to be able to explain it. If you just said, hey, I'm cruising along at this rate, and then all of a sudden there's these spikes, you need to have some sort of reason as to why that could happen. Otherwise, it just looks like you're throwing in random numbers,
Keith,
which you do not want to do. Yes.
another thing we can do too is we can highlight a number. We can go into some formatting, and we can maybe make a number bold, or let's see, I don't know, if we just really want it to stand out for some reason, we're going to have to talk about it later, we can highlight something. But we, believe it or not, we have about 5 minutes left in our session. And what we really wanted to accomplish with you today is to give you exposure to this cash flow spreadsheet. Let you see how you can fill numbers in and get more comfortable with the process of tracking your business over time and creating a plan. I wanted to make sure that we allow time for questions. And this was also giving you some Excel instruction. I know we have some people watching right now that say, I know Excel, Linda, stop slowing down. But that was part of the reason we were doing it this way, is there are so many people that are not using Excel right now. And we really wanted them to realize what a wonderful tool it is. So right now we'd like to open it up to questions for a couple minutes, and then I'll let Keith continue. But if you have any questions, feel free to turn on your microphone and ask a question. We would love to be able to focus on answering it for you. I don't see any microphones getting turned on. You are welcome to put a note in the chat. If you, maybe some people don't have access to turn on a microphone, you are welcome to put a note in the chat. I love that you brought up seasonality, Keith, because sometimes people have a great month and they think that month will continue on. And the reality of it is you really want to plan for the good and plan for the unexpected. So I'll let you continue.
Yeah, and definitely, guys, we are monitoring the chat. So if you have questions, please go ahead and type those in there, or unmute your mic and go ahead and ask the questions. We are going to kind of wrap this up because I think we've kind of shown what we're doing here, and we just repeat it month over month, right? And again, going back to the idea of a projection versus an actual statement. Right now, we're in the projection mode. We have not launched our business. We're just filling this out to give ourselves an idea of how this business is going to operate, how the cash is going to flow through this business, and what adjustments do we need to make before we start this business. If you remember months 1, 2, and 3, we were negative in those months. So one of the adjustments before we start this business that we might want to consider is saying, hey, we need more than $10,000 to start this business. If these numbers are accurate and this is what it's going to look like in terms of sales, then we really need to have a larger startup fund to carry us through those first 3 months, right? And then also looking at, kind of as we talked about, looking at your expenses. We all want to have the nicest office with the nicest equipment, but the reality of it is we can't always afford that. And sometimes we have to really focus on making our sales before we can buy the nice stuff. So let's see. Okay. So
I just sent a note in the chat. We would really love for people to complete our SurveyMonkey evaluation. We also send the evaluation about 3 days when Emily pulls together the notes from this webinar and shares them with all the attendees along with a link to the video. But what's wonderful for us is that is when we are able to share, let me explain the email. The email is going to have a link to the video that we're recording right now. It's going to have an attachment of this spreadsheet and Keith's PowerPoint slides, as well as my PowerPoint slides. And we would love to hear, what did you think of this webinar? What other webinars would you like us to create for you? We really want to provide what you are looking for. And it also means a lot to our funders, which is the SBA and Humboldt State University. It means a lot for them to know what our viewers are thinking of how we're spending their money. So we have just a couple minutes left. Keith, is it all right with you if I switch back to the PowerPoint and share Emily's information?
Absolutely.
Is there anything you want to mention before I close this slide?
No, I think this is good. I think this is kind of a very high level overview, and we'll switch back to Emily's slide because that's the information. If anybody has more questions, that's why we're here. Reach out to us and we can work with you one-on-one on developing your financial projections.
Are you seeing the proper slide right now, Keith?
Yeah, but I'm seeing it with your notes.
Let's stop sharing that and let's share the right one. I think I got it right this time. How's that?
Yeah, there it is.
Excellent. So Emily is the coordinator of everything important for us at SBDC. There is her email, emily@norcalsbdc.org. You can email Emily if you're not a member with us, if you are in Shasta or Trinity counties, and you would like to meet with Keith and have him talk with you about cash flow. You can set up an advisory session with Keith and he would be happy to meet with you. If for some reason you are not in Shasta or Trinity counties, we have an SBDC office near you if you're in the US. And there's a link at the bottom of your screen, americassbdc.org/find-your-SBDC, and you can find an SBDC office near you. We are at the top of the hour, and Keith, I will let you wrap it up for us.
All right, I think we're done here. So unless there's any last minute questions, anyone want to unmute, be brave. We're going to go ahead and end this session.
Thank you so much, everybody. We hope to see you at another webinar. Oh, wait, I'm seeing something in the chat. Don't go yet. Oh, we have lots of thank yous going on. Excellent. Thanks, everybody. We will see you at another webinar.
All right.